What's good, everybody? Spektrades back here. In this video, we're going over a full guide on order blocks and a step-by-step guide on how to pick the proper order block and not be tricked. Before we get started on the video, make sure to give me a follow on Instagram at Spektrades. This is where I am most active at. If you have any questions, make sure to give me a DM on Instagram at Spektrades. Let's hop back in the video. So first and foremost, we have to see what is an order block. An order block is essentially a supply or demand zone, or a typical counter-cyclical trader bullish or bearish order block. There are various types of order blocks, including the regular bearish and bullish order blocks, the breaker blocks, the mitigation blocks, and we usually use the 50% of the wick of the order block to enter. If you want more in-depth guide on each of these order blocks, I have created various videos on them. So make sure you go through my channel and you're gonna see the videos I made on the breaker block and the mitigation block and just the regular order blocks. But if you want more in-depth, I've also released a free course down below where I go in-depth into each order block, right? There is more. We have the IPA in the course below. I've gone through all of them in depth so you guys just understand them way better. So right here is just some basic markups. This is what a bullish order block may look like. As we can see, bearish candlestick that is engulfed by a bullish candlestick. So this is a bullish engulfing order block. So right here is just a bearish breaker block. The last bearish candlestick that did the liquidity sweep before price comes and purges through it. So right here is our bearish breaker block. And then here is a bullish breaker block. So the last bullish candlestick that did the liquidity sweep before price purged through it. And then right here is our mitigation block. So this is a failure swing. This last bullish candlestick failed to push price lower and created a lower low. As we can see, failed to push price lower and give us a lower low, but was used to just go push price higher. So right here is our bullish mitigation block. Just like I stated, I've created in-depth videos on all the order blocks, right? So make sure you go through my channel or click the link below to join the free course, right? To take the free course where I go in depth into all the order blocks that we mainly use. So first, we have to see why is your order block not working, right? So the main reason your order block are failing is probably because you are picking any random order block, right? You are not doing a proper top-down analysis before selecting your order blocks or simply winging it, hoping that this order block sticks, right? For us to pick a proper order block, a proper point of interest for us to enter on, we have to do a proper top-down analysis. Make sure, if you guys want more in depth on top-down analysis, I also release a top-down analysis where I go through the weekly, the daily, the 4-hour, the 1 hour, and the 15 minutes, right? That is how we properly pick our order blocks, right? We don't just open the charts up in just any random order block that we see, right? Because they are all over the charts, right? So we don't just pick any one of them. We do a proper top-down analysis first before we select our order block, right? And then the third step is you are probably automatically jumping to the lower time frames, leading you to see a lot of order blocks scattered everywhere, resulting in paralysis analysis. This paralysis prevents you from making proper judgments and picking the proper order block. So a lot of traders, they jump straight to the 1 minute, the 5 minutes, and just try to see a breaker block, a order block, and just try to enter it, right? Without proper, just like I stated, without a proper top-down analysis. You have to go from higher time frames to the lower time frames, right? So, and then the last steps is, it's important to note that lower time frame order blocks are generally weaker compared to higher time frame order blocks. Hence why we prioritize using the higher time frame order blocks first, and then we scale down to the lower time frames to locate an order block within our higher time frame point of interest for further confirmation. So that's why we do our top-down analysis. We pick our order blocks from the higher time frames, our strong order blocks, and then we scale down to the lower time frames once price reach them, and then we go and do our confirmation. Before we get onto the chart, this is our 4 steps to pick the proper order blocks, right? So the first step is for us to always look at market structure. Are we in a bullish or bearish market structure? In a bullish market structure, bearish order blocks act as liquidity zones, right? And in a bearish market structure, bullish order blocks serve as liquidity zones. So right here, we can see here. So right here, we can see that we are in a bullish market structure. Price is pushing up. So we can further clarify that these bullish order blocks will hold for us to push price higher. But this bearish order block right here will be used as liquidity. Price will use this bullish order block to then target this bearish order block to take them out. So that's number one. We have to see what type of structure are we in, and then it's the same thing in vice versa. As we can see, we are in a bearish market structure. So these bullish order blocks right here will be used as liquidity. Price will come in, purge through them. But the bearish order blocks, boom, price will come in, reuse them to further push price down. So that's number one. Always look at market structure. What type of market structure are we in? Are we in a bullish or bearish market structure? And then for number two, for a high probability order block, there's always a liquidity sweep. In a regular setup, price will either clear an old high or low, leaving an order block behind. And in a continuation pattern, price will first clear internal range liquidity and then create an order block. So as we can see here, price give us a liquidity sweep and then push price lower, giving us a displacement, leaving us a proper order block right here. This is what we call a high probability order block. First, a liquidity sweep was happening, and then price came and give us a breakup structure. That's for the liquidity sweep. And then for a type of continuation pattern, right, where price is already moving, right, internal range liquidity will be created. Price will then purge through it, boom, and then leaving us a order block before price go higher. And then price will come back, you reuse that order block to then push price higher. So that's for number two. For a high probability order block, there will always be a liquidity sweep. And for a regular setup, price will either clear an old high or low, leaving an order block behind, or in a continuation pattern, price will first clear the internal range liquidity and then create an order block. And then the third step for picking the proper order block, there is usually a fair value gap or inefficiency after an order block occurs. So this gap indicates that institutions, right, likely created the order block to return and utilize it later. So as we can see here, after this liquidity sweep happened, price gave us a displacement, giving us a breakup structure, leaving this gap in the market, right, this fair value gap. This right here is a more confirmed order block, right? Price will then come back, fill that gap, and tap into our order block to then push price higher. This is just more confirmation that the market makers or the banks or the institutions, you might say, right, left this right here if there's a fair value gap. So for the third step of picking the proper order block, always make sure that there's a fair value gap or inefficiency after the order block occurs. And then for the last step, right, we always are aware of fake order block. A fake order block is one that appears without any nearby liquidity or fair value gap, yet it's visible to everyone. When you can see an order block clearly isolated without anything around it, other people can see it too. So right here we might see this order block right here, right? It's a clear order block. I always look this on my chart, right? So whenever you see a clear order block, that means everybody else can see it too, right? So that means everybody else will play their stop loss right at the high and looking to go lower. Price will come and use that order block, giving them a slight pullback to then come and purge through them, right? So right here, always be aware of these fake order blocks, right? The market purposely creates these to attract dumb money, who then places their stop losses at the high of these order blocks to just get taken out, right? So we are always looking out for these clear order blocks, right? Our proper order blocks will always have a fair value gap or a liquidity low right below it. As we can see here, this is a real order block, a fair value gap and internal range liquidity right below it, right? So this is our internal range liquidity. Price will then just come back, sweep it, fill the fair value gap, tap into our proper order block before pushing price higher. Now let's hop on some live charts just to see the order blocks in action. So for our first order block, we can see that price gave us a liquidity sweep, a change of character, and a breakup structure. As we can see here, the coach and the breakup structure get taken out together, and then right here we are left with a bearish engulfing order block right here. And what we can see, price left us a gap in the market right here, this fair value gap, and price left internal range liquidity right here. What did price do? Price came back up, use all this, clear the internal range liquidity, and fill the gap and tap into our engulfing order block with internal range liquidity and below it. So price came back up, clear the internal range liquidity, tap into our proper order block to then push price higher. So this right here is a proper order block. There's fair value gap right here and internal range liquidity. Let's look at another chart. As we can see here, this is another chart where price took liquidity from an old high, right? And then price came and purged price lower, giving us a change of character, leaving us this bearish engulfing order block. And as we stated before, we either use the open or the 50%, right? So right here we are using the 50% of the order block. So price came, filling in this fair value gap. As we can see, there's always usually a fair value gap right here, FVG, and price also left internal range liquidity right here, boom, giving us a more high probability order block. So price comes, faking out early sellers. So price comes, faking out early sellers to just boom, purge price higher, tap into the 50% of the order block to then go lower. So this right here is our second chart. Always observe that there's a fair value gap and internal range liquidity. Boom. That's one of the main keys to picking the proper order block. And then here is more of a continuation type of order block, right? So as we can see here, price gave us a breakup structure, clear the internal range liquidity first, and then give us a breakup structure, and then build it up all these internal range lows, right? And then left us this gap in the market right here. So price comes back down, purge all the internal range lows, tap into our order block right here. This is our mitigation block because price failed to push price lower, as we can see. So price came back, cleared all these internal range lows, just like in this schematic right here. Boom, and then tap into the mitigation block to then push price higher. So this is another chart format. And then right here is the same type of stuff, right? So as we can see here, price left us this 5-minute order block right here, this 5-minute bullish engulfing order block with our FBG right here, this gap in the market. And then as price was coming down, price was building internal range liquidity. So what did price do? Purge all through the internal range liquidity, filled the fair value gap, and then tap into our order blocks before pushing price higher. So first we see that price came and gave us a breakup structure, a liquidity sweep to the left of us, and then did it internal range lows, and then left us this fair value gap right here to then come and just purge price lower to then go higher, just like we see it in this simple schematic right here. And then here is a more clear version, right? As we can see here, price left us this big gap in the market, boom, and then left us this bullish engulfing order block with internal range lows, right? So we see price, so before price coming back down, price is just building up liquidity, boom, 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 and then price purged through all of them, filling the imbalance, filling this gap in the market, and then tap into the bullish engulfing order block before pushing price higher. So this is another high probability order block right here. And then here is another version of the order block. So as we can see here, price did give us a liquidity sweep, and then give us a lower time frame breakup structure, and then left us another gap in the market right here, a fair value gap. So price comes and fill it, and then tap into our bearish engulfing order block. So as we see, liquidity lows above below it. So price comes and clears the internal range highs, and then fill the gap that's in the market, and tap into the order block before pushing price lower. So this is another chart of the of a proper order block. And then here, this is a mitigation type of order block, right? So as you can see here, price failed to push price higher, and then but purged through it, right? And then left us this bearish mitigation block. And as we can see, price left us a fair value gap in our internal range highs, right below the order block, right? So we see our order block right here. This is our mitigation block, and then price left us our fair value gap with our internal range highs. Price comes and purged through it, and then pushing price lower. So that'd be it for the video. If you guys want more in-depth guide on order block, just make sure to check out the link below for the free course, where I just go in depth on all the order blocks in a live top-down analysis, where I go through the weekly and through the 5 minutes to the lower time frames to show you guys how to use these order blocks right properly in a top-down analysis format. So make sure to like, subscribe, and comment, and tell me what videos you guys want me to make, and I'll be for sure to get it done for you guys. Spektrades out.